This is the CryptoBullGod. You can follow me on Twitter at CryptoBullGod. You can follow me on Tradingview at CryptoBullGod, formerly MiniSham. If you do find this technical analysis video helpful, please give me a follow, share along with the community. I'd really appreciate it. Really aiming to spread educational, non-hype material. So with that being said, a quick disclosure. None of what I'm sharing is financial advice. I am very simply put, I'm looking to educate, help, and spread sound technical analysis to the community to help others in making informed decisions. When making your own personal financial decisions regarding what to invest in, when to buy, when to sell, ultimately that ownership falls on you. I do my due diligence every single morning I wake up and I do TA. My hope, however, is that you can utilize what I share as another data point in helping you to think through what may be best for your own personal approach. And so with that being said, today what we're going to do is we're going to keep a perspective on Bitcoin. So we're going to zoom out, look at a few charts, and kind of see what's going on and what my opinions are in terms of where price is going. So let's take a look here at a weekly view to start things off. Now, this time period back here, this is actually the prior, this is 2 bull cycles ago. So this is back in 2000 and, let me see the date here. We topped out technically in 2013. So this was when, this was the bull cycle prior to the 2017 top. So this is back in 2013. You can see we had an extended bear market through 14 and 15. And what I'm pointing out here in particular, what I'd like you to pay attention to, although I have these price movements down here highlighted, don't pay attention to those for the moment. Pay attention to the orange line. The orange line is the moving average, the 21 weekly moving average. So on a weekly view, we're just looking at the 21 weekly moving average. I like to keep it simple. Keep it stupid simple, all right? So what you should notice, this date I believe is the halving, what I have indicated right there. What you should notice is when we start to battle this all-time high, I should indicate that there's 2 red lines right here. The light red line, this light red line, this implies the all-time high in terms of a weekly body close. The dark red line is a all-time high in terms of a weekly candle wick high. So this is really, truly the all-time high. It's how high price went in 1 week, but it didn't sustain that level for a full body close. It expresses the total price movement and volatility during that week. Meaning we closed a week on all-time high back in that time period of 948, but our all-time true high where we wicked up to was 1,163. Hopefully that makes sense. So this range right in here. You can see when we started to battle this range, what I really want to zoom in on here is the fact that this orange line was respected. Okay? We got a wick. You see, we wicked below, so the price movement went down, but we closed the week above it. And we continued to move up and stay up pretty substantially above this 21 weekly moving average until the bear market of 2018, where we entered this large descending triangle, as most of you are familiar with. Thankfully, I caught that one and was all over it. And was buying it at 5,000, 4,000, and 3,000. But anyway, once we closed below this 21 weekly moving average here, you can see that we entered a bearish price pattern and began to fall lower, and we hit our all-time low around, I believe, 3,123, I believe. Okay, so that's point number 1. I wanted to point out that, zoom out, take a look at the weekly view, put on a 21 weekly moving average, and I believe right now, this is a perfect point to transition, I believe right now, this point, I tweeted about this last week, okay? If you follow me again on Twitter at CryptoBullGod, I believe the point we were at right now in November is very similar to the point we were at in January of 17. I kind of highlighted this, this point back here before where we were battling the all-time high. What happened in January of 17 is we wicked up to a price level that was very close to 1,163. It was 1,000, okay, 1,140. Okay, so very close to 1,163. If you compare the price movement from this prior cycle top to this green circle right here, what I'm suggesting is this move right here to this move right here, all this price action in here is very similar. Those two time periods, our current one and the one before it, they're very similar. It's called a fractal. What a fractal essentially is it's discovering a price pattern that existed in the past that is similarly, but not exactly, playing out right now. And so upon examining that, what I've said is, okay, well, I believe where we are right here is where we're at right here. Now, if that holds true, I had tweeted out last year, wow. I had tweeted out last week that we should see price levels top out somewhere around 19,300. We actually, so far this week, have hit 19,400. So right around the level I had suggested. The other thing that I noticed, though, is that this is November of 2020 that we're currently at. This was January of 2017. Price seems to be accelerating actually a little bit here. And the price movement is a lot more parabolic in this move here. We're seeing a lot more parabolic of a movement than we did back here in 16 and 17. And so that's leading me to potentially conclude we could see a weekly candle top out somewhere around above 20,000, somewhere around 21 to 23,000 before we get a 30 to 40% correction. A 30 to 40% correction, CryptoBullGod. What do you mean? Well, if we go back to this chart here, the other key thing to keep in mind, so beyond, so far I've pointed out this 21 weekly moving average. I've pointed out the time period, I believe, that we're currently in here, that we were here. The other thing to keep in mind is that when you're investing in anything, especially as volatile as cryptocurrency, like Bitcoin or XRP, because I am not a maximalist, I love XRP. Brad, you are my hero. And I also love Bitcoin. So no tribalism or maximalism here. That is moronic, in my opinion. So when we began to enter our bull market, right, shortly after the halving, what we saw prices that had wicked below but never closed below this 21 weekly moving average. The other thing we saw here, look at all these corrections, 39%, 35%, 33%, 39%, 41%. Two main points, okay? Two main points I want to make there. First off, the market cap of Bitcoin has grown. So you may see price volatility. Not to that degree. You may see something a little tighter together. Not as high as 40%, maybe something as high as 37 or 35%. But the thing to expect here is, one, I fully expect, given that the price level we're at, we will hold above the 21 weekly moving average. We will get 30 to 40% retracements. I mean, for me personally, how I'm playing it, again, this is not financial advice. I'm just sharing with you how I personally plan to play it. Look at this parabolic move here. Okay, people are euphoric right now. I'm not buying right now. I'm not buying. I'm not selling. Again, I'm invested for longer-term swing cycle plays. But what I'm waiting for is I'm waiting for price to get closer to this 21 weekly moving average before I pull the trigger personally. And that should be somewhere around a 35% correction. So that's personally what I'm doing. Absorb that information and use it however you see best fit. So again, we've looked at the weekly view in different perspectives. Now I want to jump over actually to more of a micro perspective. This is a 12-hour chart. A 12-hour chart. Again, I believe, oh no, this isn't the halving. This is the start of, okay. So this is right around this area right here is currently where I think we're approximately at. The purple line is the only thing I want you to pay attention to. Again, I like to keep things stupid simple, okay? We respect, for the most part, this 200 12-hour moving average line. That's what it is. This is a 12-hour chart. This is a 200 moving average on the 12-hour chart. Okay? Look at the prior prior bear cycle. Once we went below definitively this line, we just never could quite get above it and stay below it until we bottomed. Once we began to enter our bull cycle, look what happens here. We have sharp, quick movements that are recovered. Sharp, quick movement, it's recovered. But we stay above this 200 12-hour moving average line. And that's what I'm personally looking for. If I want to zoom in, I'm going to look at a 12-hour chart. If I see we start getting below this 200 moving average 12-hour line here, I know that we're in trouble. Look what happens when we sustain. We don't quickly, sharply move back up above this level. Above this level. Look what happens when we move below it and we stay below it, all right? Problems occur, all right? Again, descending triangle. People were crying and didn't know what was going on in Bitcoin. I remember people thought, I don't know, I think Tom Lee came out and said something, I don't know, price like maintain this six. Here, I'm going to go on a little bit of a tangent. Here's another thing to keep in mind. The more price continues to knock on the door of a certain level, whether it's up or down, the more that level is going to be broken. Okay, that's a fact. It doesn't get stronger. That price level gets weaker. We kept knocking between 58 and 6,200, and we kept bouncing off of it. At some point, that level was going to break. So same thing, as we continue to move up, if we battle 20,000, for example, for a little while, we keep beating, maybe we're between 19,400 and 21,000, and we've just hit it a few times. The more we bounce off that level and get rejected, and it's like a wall that each time we hit it, it gets weaker and weaker and weaker, all right? And so, wow, I went off on a tangent there. The whole point was to show you this 12-hour chart and to show you that we want to see price levels sustained above the 200 12-hour moving average, okay? Let's look at where we're at right now. Right now, we are way above this moving average. So, again, another reason to express caution here. I would not personally, just for myself, be buying here. But look what happened here. I remember when on Twitter here, I had commented, we better hold this line. We better hold this line, because if we start dipping down here into the 8,000, a lot of people were calling it 8,000. I didn't see 8,000. Go back historically and look at my tweets. I felt like we were going up and we were in an ascending triangle, which actually did play out. Anyway, but when we got down to this level, I said, look, we better hold this level, because if we start dipping down here, we're going to have a major correction. History says it. If you look back at the chart we just looked at, whenever you, again, considering the fact that I am drawing the comparison to current price action and saying that we are following price patterns and price movements similar to the prior bull cycle, a fractal within the chart, I'm going to look to the left back in history to decide what I might expect to see occur to the right. Okay, that's my perspective. The last chart I wanted to pull up here was just a daily view. We'll look at the RSI here for a second. This line is drawn because historically this is an area on the daily where we typically top out at. You can see we've been, from an RSI perspective, we've been overbought for a while. This is why it's also important not to rely on one indicator or one moving average in terms of understanding if you're overbought or oversold. This is saying we've been overbought for a little while, but we could stay overbought for 3 months. I mean, you study charts long enough, you understand that you could be oversold for 3 months. Hell, XRP's been oversold for, God, I think people were in depression for years over that one. Anyway, so it's good to see it move up. But anyway, the main thing I would point out in this daily, which is really good to see, is this 10-day moving average. Look at this. It's like it's following a tightrope here. It's never closed below this 10-day moving average since looks like back in October 6th, over a month ago. The first indication to me that will tell me that we could potentially get our 30 to 40% correction will be when we get a daily close below, okay? Not a wick. A daily close below this 10-day moving average. So I would keep an eye on that. If price starts to close below this 10-day moving average, especially if we get below this 20-day moving average, then I would expect a 30 to 40% correction. So I would keep an eye on that. So hopefully you found this content helpful. For all the ladies in the audience, if you think that they would find the video more helpful if I would do it shirtless, please let me know. I would be more than happy to bring more of the ladies into the cryptocurrency community. Very happy to do that. I think for the next video, what I'm going to do is put together a video discussing price relativities to Bitcoin. I think that what I've noticed is a lot of people struggled with fractions in grade school, right? And I don't mean that as a derogatory or to put anyone down. I don't mean that. I'm just trying to joke around and have fun. But it is a fraction, and so trying to understand the relation of, say, the XRP to BTC chart, the Ethereum to BTC chart. What does it really mean when you're looking at an XRP BTC chart? Does it mean that if XRP BTC ratio is going down, that the XRP USD price is going down? It does not. And so why do I say that? So just really explaining the basic components to those calculations and understanding how the numerator and the denominator price movements have an impact on the price chart when looking at those, I think it would be really helpful for the community. So I'm going to put that together. So again, I hope you found this helpful. If you really appreciated the content, please like the video, share the video, follow me on crypto Twitter at CryptoBullGod. I know I can be a little out there sometimes, but I'm genuinely just trying to have fun and help people. So take care. Stay safe out there. It's a crazy world.